Invesco Mutual Fund. Let's move on then. The Bata stock has seen a 9% up move this month as Omicron fears have eased. To assess the demand trends as we see a gradual return to offices and schools, we are joined by Vidhya Srinivasan, CFO at Bata India. Ms. Srinivasan, good morning. Thanks a lot for joining us. We've seen, the fears have clearly eased, and thankfully this third wave has not been brutal at all. This morning we had the BMC also telling us that we are looking at easing, further going forward. Has that started to reflect in the demand trends yet?
I think, at the moment, as you rightly said, we are not seeing, we are expecting the third wave is not going to impact as much as the second wave, and we are cautiously optimistic. Let's see how it goes.
Ma'am, good morning. Qualitatively speaking, how have sales in the third quarter, demand in the third quarter panned out like as compared to the previous quarter? And also if you can give us an update how the new year has started?
Well, I can't comment too much because there was a silent period, but I think, I think we commented in the past, the festive season has been good, and we are now waiting to see how Omicron pans out as far as the market is concerned. We're expecting things to kind of return back to normal as quickly as possible, much faster than the second wave. And most of our stores are still open. Consumers are coming in. And we are taking all the necessary, precautionary measures from a safety standpoint. So we are cautiously optimistic.
Okay, cautiously optimistic. Well, I, for one, can't wait to buy school shoes once again, right, for our kids. And I mean, the BMC chief was quite hopeful that 15th Feb is when schools will start. So let's see. But ma'am, wanted to ask you to give us a little more color on geography-wise, where are you seeing the maximum demand recovery? Is it more to do in urban markets, tier 1, tier 2? And how are the rural markets shaping up now for you? If you can also give us a breakup of how much you get from these markets.
Right. So I think what has happened over the course of last year and this year is that we are really seeing our tier 2, tier 3 markets doing quite well. And I think our focus in 2022 is going to be around tier 2, tier 3. I think urban centers, by and large, they've not seen a huge decline or anything of that sort. But I think what has happened is that obviously there have been, switches which have taken place in product categories between formal to more casual, active wear kind of a thing. And that is something that is reflected in urban market sales. But tier 2, tier 3, I think, is doing quite well. And I think we're expecting that trend to continue into 2022.
Okay. Ms. Srinivasan, your last quarter results indicated that you are still 15% away from pre-COVID level on revenue and 50% away on PAT because of the margin concerns. But once the normalcy is back, do you see getting back to those kind of levels?
Yeah, for sure. I think our focus really is to get back to 2019 levels as quickly as possible. I think to some extent, I think our building blocks are in place from a strategy standpoint, whether it be in terms of our own store growth or in terms of franchise expansion, distribution expansion, digital penetration. So I think we are pretty much, I think some of the things that happened in Tuesday, etc., is reflective of that. But, post this whole Omicron phase, I do expect that we would be back to 2019 levels as soon as possible.
There has also been, you've highlighted earlier, ma'am, the focus on premiumization. How is that? How are those efforts going? Could you give us a sense?
I think, in the current footwear market, it's really horses for courses. So, for example, as I talked earlier, we span the spectrum from formal shoes to, to casual shoes, active wear, and obviously, much more, casual type of footwear. So, in each of these product categories, our endeavor is to look at premiumization, I think, and it's doing quite well. I think we are seeing that trending in our product categories. And obviously the mix is also impacting it a little bit, but I think we are seeing that strategy pan out quite well.
Okay. Any kind of investments that you plan to make over the next 1 to 2 years? I know it may be early days yet because you don't know which way things are headed, but I'm sure there are some plans in place, right? What would the strategy be, say, in the digital business? Are you looking at an omni-channel presence? And what kind of investments is Bata going to make to further that strategy?
I think the last couple of years we've been reasonably cautious in terms of investments, obviously given whatever is happening from a COVID standpoint. But this year we have been much more, I think we are looking at focusing investments in three buckets. One, as you rightly mentioned, on the digital, infrastructure, on what we're doing on the digital space, on our supply chain. So we are upgrading our capabilities. We are obviously also investing in marketing. I think that is an ongoing trend, and I think that is something that we will continue to do this year. And the third bucket is around our manufacturing capabilities. We are upgrading infrastructure wherever it makes sense. So I think we are, and also on the IT capabilities. So I think the four buckets of investments that we are really doing.
Okay, what about advertising, Srinivasan? Do you expect that expense to go up or stay at where it is?
See, I think again, like I mentioned earlier, we've cut down on a lot of discretionary spend last year, but I think we've seen a huge amount of traction to our surprisingly Bata campaign. We are seeing resonance among consumers, and I think we will be investing in that campaign. We would also be communicating with our customers around our, investments in sneaker, casualization, all of which, we are expanding. So I think our communication around those fronts will continue.
Ma'am, shoes and products related to school-going children. I mean, could you tell us how much is that as a percentage of your overall volumes which you do? Sales, essentially. And I mean, it's been unprecedented, right? 2 years plus schools have been shut. Now, finally, one hopes they start and then they stay open. How is that segment expected to perform? And what have you done there? I mean, because you've had, as I said, no activity, no sales, I guess, for 2 years plus.
Yeah, so I think schools roughly contribute about 6-7% of our overall revenues. So obviously, in some quarters, much more. And, I think what has happened in the last couple of years is that, or at least the last few months, has that, schools have progressively started opening up. And like you mentioned at the start of the segment, we are hopeful that some of the states will again open up around February 15. So we are a market leader in the segment. We've got a strong product portfolio in that segment. And I think that is something that, we will continue to kind of monitor. I mean, it's not in our hands, but we will do whatever it needs to be in terms of readiness to be able to address that segment when the schools open up again.
Okay, I'm sure you're waiting for that as much as we are. Thanks a lot for joining us, ma'am, and have a great day. Well, that's the word coming in from Bata. They have high expectations. Thank you. And the stock has gone up quite a bit in anticipation of reopening of offices, schools. And we just heard from the BMC chief as well that 15th February is when schools could officially reopen because, of the fall that we've seen in COVID cases. Just a couple of more stocks. Real estate is actually booming, not just the south-based real estate companies. Something like an Indiabulls Real Estate has also started to pick up a bit of pace over there. So that one, both on the volume as well as on the price charts, is looking good. And many stocks hitting fresh 52-week highs right now. So Coffee Day is at a fresh 52-week high, 70 rupees on that one. Supriya Life Sciences, I had mentioned that earlier. Logistic companies are doing very well. Gati is at a fresh 52-week high as well, up 3% right now. And something like Soba and Brigade are both sitting at fresh highs. Let's do one thing. Let's take a quick commercial break on that note. But when we come back from the break, the stock on our radar will be Tech Mahindra. The company has made an acquisition worth 330 million euros. We will speak with Vivek Agarwal of Tech Mahindra.